sounds like from what Gunnar was telling us, that is a significant driver with in 2011, the percent of salaries and bank transfers being just 1%, I think you said, and then in 2016, it was about 20% around. Is that?
Yep.
Yeah. Great. Well, Matt, I'd love to turn back to you. We've been talking about DFS and some pretty exciting technologies, but behind the coolness of the technology, what does DFS mean for the actual people in the countries where you work? I mean, you're really focused on DFS amidst all of USAID's other priorities, and so take us back to the individual.
Sure. Yeah, our approach on DFS is really around practical use cases, practical ways that it can help us. And we view DFS as a means to an end, or as a tool that can help us achieve a variety of our objectives. So financial inclusion is certainly one of those, but it's only one. And I mean, we're interested in how digital finance can accelerate other outcomes we're seeking. So to give you a couple of examples, one would be access to energy. Right? How do we help more households have access to energy? And of course, what we're seeing in some markets is that that's being powered through off-grid solar panels that have a mobile money SIM card embedded in those solar panels. And the reason that's significant is because it enables consumers to repay the loan for that panel in small incremental amounts over time. But it also enables the provider of the panel to turn off the panel, right, if payments aren't being made. So that's one area where we see digital finance as being an enabler for another type of goal. Another one is in healthcare. So if you think about the Ebola crisis in Sierra Leone, and if you recall a few years when it was during that crisis a few years ago, healthcare workers at one point were going on strike because they weren't being paid, or they weren't being paid quickly enough. And part of that was because of cash-based payments just took so long, and there are all sorts of problems with it, and they may not receive the right type of payment, or there could be leakage or all sorts of things, right? When they switched to electronic payments, instead of paying the workers electronically, the number of strikes went down dramatically. So there's an example where you also see digital finance having a real-life impact, and that I think is quite significant. So those are the type of things we're interested in. I think another aspect of our interest, though, is around efficiency. I mean, the type of things that you were talking about, for example, about reducing the cost of payments and those sort of things. We're also interested in how digital payments can increase transparency and traceability and accountability for our programming. And then I think at the end of the day, too, we're talking about building a digital ecosystem that can lead to economic growth more broadly, too, which I think was a point Jason made earlier.
Mm-hmm. Great. I have a question that could be answered by Gunnar, Vince, or Danielle. So I'll put it forward, and then whoever talks first gets it. Right now, in emerging markets, on the whole, we're mostly in a pre-smartphone environment. And Gunnar, you might want to correct me if I'm wrong there, but it seems like the telcos are really owning the relationship with the customer when it comes to mobile money. So how will the coming smartphone environment, because it is coming, we saw those hockey stick graphs this morning, how will the coming smartphone environment change the landscape of access to banking services on mobile phones? Whoever wants it.
I can jump in very, very quickly.
I'll comment afterwards.
Okay. No, just very quick. So before I joined the GSMA, I was launching these services and trying to grow them in a few African markets. And the limitations that you have by not having smartphones out in the market is incredible. So I think every provider today have a strategy to complement their existing, whether you're an operator or non-operator or a bank or a non-bank. Of course, you have a strategy how you can have a much richer engagement with your customers with an interface that actually is an interface and not a very cumbersome menu. I'm not sure how many people have used USSD or SDK menus here, but it's not great. The fact that people are using it just shows how much value these services bring to them. So I think that is the main comment I have. I think everyone who is forward-leaning and wants to invest in this business have a strategy towards it, whether you're a new player or an old player. That try to take advantage of the increase of smartphone penetration?
It won't have an impact for a long time because nobody trusts the banks. That's part of the big problem. People trust the telco. They provide a service. I think I mentioned this before, where in other conferences, where the CEO of a bank, when I asked the CEO of a bank, why do you charge your end users a monthly fee on their account? His answer to me was, someone's got to pay for his tie. Whereas the telco is wearing a tie, the CEO of the telco is wearing a tie, but he's charging on a usury fee. You know, you use my network, actually I charge you for that usage. Whereas I may not use my bank account for an entire month, but you're charging me actually a fee for what? Just to hold my money? That's my money, not yours, and why are you taking money away from me? So they look at that as you're stealing from me at the end consumer point of view. So we got to change the trust model there. And maybe it's the banks that have to change their mindset and charge on a usury fee, not just on hey, you owe me $20 this month for the privilege of me holding your money. I'd just sooner put it in my mattress then.
Danielle?
Well, from my point of view, I would say that, well, for Brazil, I think it's quite a different...
Not in a pre-smartphone environment.
Scenario. You know, I think that MNOs are still struggling to their subsidiaries to exactly to get some trust and to be able to operate in this market. In Brazil, we have a long tradition of using banks mainly because of a long period of hyperinflation. So people are quite used to technology and to get money into banks and dealing with that. Definitely, I think it's a whole process of transformation. So you have to lead your whole strategy on where the money is, where you can make profit and make things moving. Certainly, smartphones are there, and you see in Brazil, 95% are already smartphones. So if MNOs are going to keep with this strategy or not, it's kind of a live question. One thing we have to see is one of our MNOs have already sold their subsidiary to an acquirer kind of 2 or 3 years ago, and they started a new one 2 years ago. So maybe it's kind of a decision to get out of the market and get back again. Another MNO had a solution with one bank, a joint venture with one bank till a couple of years ago, and now they're trying with PayPal instead of a bank. So I think they are trying to adjust. They are trying to find their markets. So it's a living world.
Yeah, it's a quickly moving space. I just want to warn you that we're going to go to questions from more than just me, even though I have about 15 other questions I could ask in just a minute, but go ahead.
No, the data we do see from smartphone, so when the operators that offer, or mobile providers offer both, we see what you can expect to see is that increased usage, more uptake on financial products rather than just transactions. So it is very promising. I think if you have millions of customers today, you have the benefit of having them and introducing a smartphone layer on top of it. If you're a new player that comes into the kind of the smartphone opportunity, the advantage that you have is that, okay, you don't have the data on customer, you don't have an existing base, but you can come up with a new business model maybe that could be more in a way to acquire customers more quickly. So I think either if you're in the game now or if you're entering as in the smartphone with a smartphone angle, I think you have pros and cons.
And you guys are working on some sort of industry-wide open API thing, right?
Yes, we're trying to create a plug-and-play environment for the industry to be able to grow and have onboard merchants and companies and things like that.
Matt, did you want to jump in at all? I saw you leaning forward.
No, I'm fine.
Okay. All right, great. Well, let's go to questions from you all. I think I liked the way we did it in the first panel, taking 3 at a time. So where are the microphones? Yeah, go ahead. Start in the front.
Hello, everybody. My name is Maria Lopez. I am a Columbia University student. The question that I have is, what is the one key risk on the mobile business model approach, and what is the one key measure to mitigate this risk? I am focusing more in the emerging markets like Latin America. Thank you.
Great.
That was a long pass. This question is particularly for Matt. I really enjoyed your comments about India. So I have a question. So the National Economic Survey, the 2016-2017 for India came out and really shocked, I think, everyone who's worked on Aadhaar. So for example, their conclusion about Aadhaar and financial inclusion among other types of inclusion, was that while there had been excellent disbursement of Aadhaar, the problem was authentication, and there were very significant non-authentication rates. For example, in Jharkhand, the non-authentication rate was 49%, and for example, in Rajasthan, it was 37%. And the conclusion of the report was that this had resulted in very profound exclusion financially in those states. So we're very interested in finding workarounds to that, as well as other policy issues in India, but I would just be interested in your comments on a good policy workaround for that situation.
I think there are a lot of questions over here. If you want to come down, we can take one more.
Yeah.
Great. Anna?
I think, okay, good.
Hi, my name is Ana Pantelic from Fundación Capital. My question is for Gunnar. The examples that you gave about mobile-led additional services, so credit, insurance, and savings, you said that there were a number of interesting cases, and I'm curious what you see as potential barriers to this scaling up, particularly in low-income markets, and whether it's perhaps regulatory, or could you speak about what more we could do to advance that broader product offering? Thank you.
Great. Let's go in reverse order. Gunnar, do you want to speak to that, the barriers to scaling up? Anna's question?
Yeah, absolutely. It's a great question. I think it's very to the core of like how to expand and grow, continue to grow this industry. I think on a technical perspective, we have this harmonized API initiative where we have gathered the whole industry, so providers, banks, financial infrastructure, to come up with a single specifications that allows, if you have a business agreement today, often you have a 3 to 6 months delay until that goes live. So that is an incredible barrier. We want to remove that and just remove the technical friction that exists. So that's on the technical side. And we're trying to solve that as an industry as a whole, and Vince is part of this, and the Gates Foundation as well. On the regulatory side, I think there's a couple of risks or barriers. Actually, one a bit worrying trend that we've seen lately is kind of over taxation on digital transactions, which is very counterintuitive when you think of it, because it's a great way to like broaden your tax base and collect money very efficiently as a government, but a lot of governments also have holes in their budget that need to fill. So we're actually seeing that digital transactions are being targeted as a way of collecting taxation, which drives up cost and puts kind of, again, friction, but more on the commercial side in the industry. So I think that is a risk. Yeah.
Great.
Yeah.
Did you want to add anything?
No, I'm sure.
Okay, well, I'd love to turn to Matt now and ask about Aadhaar authentication and unintended exclusion, as much as you're able to say on that.
Sure, and I'm cognizant of the fact that there are other people in the room who know much more about identification and identity issues than I do. But yeah, I mean, I think it's sort of a, so I know with Aadhaar in particular, I mean, they started with capturing prints, fingerprints, and they're now also capturing retinas. So I think that they're improving it, but I mean, there are issues with the system like that. I mean, ultimately, you also have to have connectivity, right, to be able to sort of run those checks. I think outside of that, though, I mean, we should, I think one possibility as we think about identity and authentications is to make sure that we have a system where there are multiple ways that people can authenticate they are who they say they are, right? So that there doesn't need to be reliance on just one system, right? But there can be multiple ways of doing that.
Thanks, Matt. And Pam, you're totally right. We didn't really talk about identity as a driver of usage, so maybe I can just kick that to whoever the next moderator is on the Global Payment Initiatives panel to put that on the agenda. And then there was one last question that Maria had that I thought was really interesting. I'd love to put Danielle on the spot to name one key risk. And then Vince, I'd love for you to listen and offer one solution to that risk, if you could.
Listening.
Well, if you ask a central banker, which is the core risk on all this business, I have to say that is a company to bankrupt and leave the customer without their money, and their customers to lose faith in the whole financial system, and the financial system is in the end our core business. So that's the key problem is exactly the financial risks here.
I don't know if I can solve that.
Is there a software solution for that?
Unless it's free, but you get what you pay for then, yeah.
Feel free to choose another risk, Vince, if you want to.
I think I'd like to highlight on what Gunnar was saying, where it's governments are stepping in now and taxing. I know that one of the implementations that we did in East Africa, at the time, I remember the CFO telling us, no worry, I've got actually unlimited budget, well, unlimited being actually a cap term there, but you know, he was seeing a lot, like his total stored value was somewhere in the order of 120 million, and so he was earning interest on that, and that was helping to fund his projects and the roadmap of the mobile money ecosystem and the implementation and paying suppliers, et cetera. Now taxation came in. Right now, actually, and so everybody's now realizing the value of what these digital wallets are holding, and everybody wants a piece of the pie. So what didn't exist before is now coming to realization. And so as policies are changing, and as everybody wants a piece of the pie, and they're getting visibility into these transactions, yeah, the profitability isn't as great anymore. And also the policy in that market changed where they were able to keep a large percentage of the interest. Now they have to share it. So some of it has to go back. So again, it's just different policies are actually are putting pressures on the business models that were once hugely profitable and helped to fund the growth. They're now inhibiting growth.
Gosh, I wish we had time to go into specific market examples of what that looks like and name governments. Maybe we can do that in the break. It might be a little less controversial too, but love to go back to questions. We've got a hand up here and two down here.
Well, Cass Calba, Calba International. One of the early drivers in M-Pesa in Kenya 10 years ago, after a period of civil disturbances, was that people were afraid of carrying cash. And so suddenly an outside source for storing it became more trustworthy than carrying it. I wanted to see if Matt Homer's chicken and egg problem has been approached in the same way. Besides the customer asking for payments, electronic payments at the store, there's the issue of cash at the store and the retailer feeling unsafe with that cash. So as long as you don't replace the cash with an expensive terminal that's also going to create security risks, has this been a factor in any of the examples, you know, targeting areas where that's a concern and finding more secure solutions of introducing mobile payments kind of approaches?
Thanks for that question.
Hi, Diana Gully. I'm with Women's World Banking. I would like to ask Gunnar and Vince, you were talking about smartphones. Do you have any data on current existing customers, how many of them are now using smartphones from mobile money users? And also, what does this mean for the business model going forward, especially when fintechs can come in and provide mobile app applications? Thank you.
Hi, I'm Joyce Searles from Customer Commons. I have a question that's very closely aligned to this chicken and egg question, so I think it's good to put them together. It's really more about the broader, is there thinking in any of your organizations about the broader alignment of incentives from the individual side? Because currently, you know, we know why governments want the uptake on usage. They want more tax. We know why the telcos want it. They want more transaction fee. We know why the banks want it. But like, why does the customer want it? And particularly when you're talking about getting out of a cash society, it's so much easier to be in a cash society. What is the bigger thinking about what are we going to give the customer? So they're going to come, because that's the most potent force. If they come and say, hey, you got to use this system because it's going to provide X, Y, Z benefit for me.
Great. Let's start with that one with Danielle. You mentioned that question that you had in Brazil of whether consumer demand is what's driving the uptake of digital financial services, or whether it's a supply side thing. So would love your thoughts on that question that you had.
Oh, that's a great question. In fact, we could spend almost all day here discussing this problem. I'm always I'm a bit afraid of considering people naive and not wanting to use all these solutions that we are always saying that it's really the solution for the whole problem. So maybe we have a good point here. Why do people do not choose to go to cashless solutions if they continue to move cash? One incentive that we could say is, if the consumer needs security, they would probably go for a cashless solution than to remain with cash in their places. But it seems that it's not the whole solution. We wouldn't go to places with less security to incentive cashless solutions. I have already made this point earlier, so it's quite easy to a central bank to get a cashless society. It's just to stop printing cash. But it seems that it's not the solution that we want. So the thing is that we don't want cashless societies. We want that societies in which the financial system are a bit more efficient, and for financial inclusion, we have more equity in assessing the whole products. So that's just some ideas. I'm not sure if I could answer your question, but just to propose more wide discussions to this topic, which is quite interesting.
All right, let's kick it to Matt and see if Matt can answer it for us.
No, I mean, I think that, there are a number of reasons related to the financial service itself that consumers may want to adopt it, but I think ultimately the real value is is around things outside of the financial transaction to a consumer, and for a merchant as well. And I think for the consumer, and to give you an example, I think that it's an opportunity for them to participate in a new economy, for an opportunity for them to become, in India, a driver for a car share company, or to sell or purchase products on an e-commerce site. To me, that's the real value, is really, it's nothing to do with the transaction itself. It's more about the new opportunities that it opens up.
And did you want to comment at all on the...
Yeah, on the other question, yeah, safety, absolutely. That is definitely, particularly in rural areas. So we did actually a quantitative and qualitative survey with a number of merchants in India, and safety came up frequently as a concern. I think it's one that they've sort of learned how to build within their life, right? So it's a concern, but it's perhaps not the biggest driver to accepting electronic payments as we might hope. But I think, as your question points out, it can vary, based on geography and neighborhood and those type of things. So it's absolutely something that we think is a compelling value proposition to merchants.
Great. Well, let's end on that question from Women's World Banking on smartphones versus feature phones. What does that mix look like, and what's the trajectory? We have been talking about a smartphone future now for, I feel like, the last decade, and it's not here yet in emerging markets. So we'd love to hear the state of the smartphones from you.
No, I think it's a great question. We don't have data on actual usage, or what we have, I don't think, it wouldn't be representative anyway, but half of the companies we work with, our members, they have smartphone applications, so over 50%. So that's encouraging to see. I think what it means for new entrants, I think we will see new entrants coming in. Then it's a big question then is what happens around regulation for that, because now it's regulated nationally. We're likely to see more global players or regional players coming in. also to my comments before, I think this is where it becomes interesting because it's also when we as an industry, we have some scale as well. So I think, yeah, it's difficult to say. By 2020, I think more than half of the, like everywhere in the world, more than half of all mobile phones will be smartphones.
All right, by 2020, more than half of the phones in the world will be smartphones. I wish I were a more prolific tweeter than Donald Trump. I have been tweeting this morning, but I wasn't able to tweet during this panel, so I've composed a few tweets to conclude that I'd like to end with. So Gunnar says, DFS is no longer just about M-Pesa in Kenya or sending money home. Vince, at MasterCard and at Visa, take note, there's no competition from the incumbents to Telepin. But I also had a second one from him, nobody trusts the banks. From Matt, DFS is just a means to an end, but we have to figure out first which comes first, the chicken or the egg. And Danielle was able to figure out what the hell this DFS thing was, but still couldn't cash in himself. Thanks so much for listening, and I hope you enjoyed this panel.